like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
GETCRACK. Wake up, motherfucker.
From everyone at Palantir, a very, very, very Merry Christmas, Happy Hanukkah, and a truly wonderful New Year. This has been an extraordinary year for Palantirians the world over, and our supporters the world over. We got into the S&P, which is a sign of the juggernaut that our products created. We made people understand that ontology is the power engine that makes LLMs actually useful on the battlefield in the commercial arena. We are at the core of making the obvious superiority of the West not just a moral platitude, but a factual reality in industry, especially in America, on the battlefield, both for America, most importantly, as the leader of the free world, and for our most important allies. We are grateful to the people who installed our product, helped us build our products, and have used our products, especially those that are in harm's way, even as we speak. Also, exceedingly grateful to all of you individual investors who took the time and opportunity and had the courage to look past conventional, rusty, crusty platitudes and look at our company as it is, talk to our actual clients and people whose enterprise we're transforming, and put your own money at stake. And on this Christmas, all of us Palantirians are very, very grateful for the role we play in making the West stronger, better, and undergirding its superiority as a force of good and something to be reckoned with, and on occasion feared. Thank you.
Guest says a new type of addict is showing up to Gamblers Anonymous.
You know, people think we do have all these things.
I do have. It's the same person as my stylist and my assistant and my boss. It's all the same person.
All the same person.
Yeah, anonymous. You do too. Anonymous meetings across the country. And you have a daughter who will soon collaborate with that other person to where you have no say on anything whatsoever. Gunjan's here. Her piece in the Wall Street Journal is titled, "More Men Are Addicted to the Crack Cocaine of the Stock Market." This is horrible. Joining us is
I saw this headline. I was like, what are you doing?
Terrible. Gunjan Banerjee is the lead writer for the Wall Street Journal's live markets coverage. She's also a CNBC contributor. Is it like the Mag 7? Is it options? Is it the Mag 7? Where are you seeing this phenomenon? And I used to be a stockbroker, and there was a time with options where I definitely know what you're saying.
more and more men are getting addicted to trading in financial markets. And what dozens of individuals told me, counselors, doctors around the country told me, is that a lot of this is concentrated in options, short dated options, and cryptocurrencies. That's really what has gotten a lot of individuals around the country into some of the most trouble. As one counselor told me, one client walked into his office recently. He was suicidal because he had lost $14,000 trading options on Robinhood. So these short dated options, the 0 day options, are really getting a lot of investors into so much trouble. One investor told me they were his downfall.
Those are relatively recent. My problem, Gunjan, was wasn't really a problem, but on option expiration days, when you are going to settle, if you're right around the strike price, you're just out of the money, you're just in the money, you can either buy or sell the options, and a lot of times by the end of the day, it settles outside of the money. So things that are going for a 16th can close at 3, something like that. And I mean, you can't believe the amount of money that you can make. But then a lot of times the pros are gaming that system a little bit, and they'll close you out of the money. And but with these, so now it's with these short dated options. How long I've seen that, and we've talked about them. How long have those been popular?
This is Wall Street's hot new trade. These really only took off the past 2 years. It's a relatively newfangled product that has reached new heights this year. And when you look at the data, it's really quite shocking how much of the activity is taking place in these short-dated options. For example, in NVIDIA and Tesla options, around half of all activity is taking place in trades that expire within just 5 days. And those are the trades that people are calling the crack cocaine of the stock market. They're really quite addictive because the gains and losses are just so quick. And what traders told me was that it always seems like the next jackpot is just one trade away.
And they're high beta stocks, so things like NVIDIA and the like. Is it like Las Vegas, all the nice buildings and resorts, they come from somewhere, don't they? It's not like all the people that go there necessarily have multi-million-dollar houses, but the companies end up there. Do most people lose at this, Gunjan? Is anyone getting rich?
I mean, I think Wall Street is certainly getting rich off these products. And most individual investors I spoke with said that they were on the losing side of these trades. I heard some harrowing tales of 6 figures lost trading options, trading cryptocurrencies. Some people had lost it all. But there were also some really dire mental and emotional consequences. You know, some men told me that their marriages were on the verge of or had actually ended in divorce because of their trading. One man I quoted in this article said that his wife gave him an ultimatum. You need to stop trading or I'm done. Because the losses had gotten so bad, he was growing isolated from trading. He was growing depressed from trading. So this is going past just financial consequences now. The trading has severe health consequences for a lot of the individual investors that I interviewed for this piece.
It sounds like all the same symptoms of sports betting, or and then you're down. You try to make it back, so you make even bigger bets, and I can see it all happening. And you probably need the same type of intervention that's decades old for normal gambling. You probably need some type of program or something, right? It's hard to quit.
Exactly. Exactly. And, I interviewed treatment centers around the country that said they have seen an uptick in patients seeking help for trading in financial markets. And this is new for a lot of doctors and counselors out there who aren't familiar with things like options and cryptocurrencies. But to your point about sports, similar to how you can bet on how many points, say, Jalen Brunson is going to score in the first quarter of an NBA game, that's what you can do in the options market today. You can bet on where stocks and indexes will be in just a few hours from now. It's not that different from sports betting.
Right. There's commercials now where there's an individual who's betting on whether the kicker makes the field goal that's coming up in like a minute. Like you're on a commercial break, a field goal's coming, you can bet on whether he makes it from. That is near term, and I guess it's happening here. Gunjan, thank you. I don't know. It's troubling, and but it's good that you're bringing it to everyone's attention. Maybe we can prevent some people from starting it.
Hey, what's up? It is the day after Christmas, December 26, 2024. So I played that one on the late night stream, close to late night stream. I don't remember. Christmas night. I think I played that one. It was a nice little piece. And yeah, I like the crack cocaine, all right, of trading, but there's different levels. You can go up. Yeah, you can go up to the options level, all right, and trade crazier stuff, but I'm not gonna say that. However, let's look at what we got so far. So I got some tickers scrolling at the bottom. So this one, I'm gonna list out the stuff I talked this week. We had some stuff talked last week, but let's go over what we got here so far. Sound, right? So right now, it's been bouncing above that 18 area, and it looks like pretty good volume today. And well, you know, it is vacation time. I'm not sure if I'm going to believe these type of moves or not. I think HB sold. He's done with this one. I think that's it for him. Uh, so if you guys got in around this zone here between the 5 and 8 area, now it's 24. If you want to expect any more moves, I don't know, because at this stage of the game, the reason why it was moving up, mostly probably because of earnings, was finished right here, the November 12th, and then they had some conferences, and they started talking about like new customers, like a taco truck or something. And I don't know how taco trucks or getting new customers for that. So this one, SoundHound, they do voice recognition, okay, AI. So a lot of people, you get your orders on, like, you go to the drive. That's probably what they use at this point. These, or even the phone. Maybe it's the phone. I'm not sure what they do. All reason I picked it, I just like the chart, because if you look here, right, it was building its move here since February 2024. It did push up, so it got out of this lower base, goes up here, makes a shelf, and then it's building its energy. I could tell. And once you launch, I think this was like probably just around election, right? Bam, you hit that, you pull back, and then you got to start running. Yeah. So I don't know what you want to say, because we got New Year's. We're already at new highs again. This is the old high, around $17.88. This might be it. This might be the final move. Now, if we look at Palantir, right? If you guys did Palantir, and I did the Christmas greeting from the CEO and all that, yeah, it's been a good year. You're on Palantir. I was here since 2022, been building more positions up here, and I think, yeah, HB took a gamble right here, right at this low, right when the whole stock market was crashing into that Black Monday, and he took a chance because that Monday had earnings for Palantir, and when the market recovered and Palantir delivered, then that was the end game, because this whole bar, this green bar, it just stayed above it the next few days, and we just went straight up after that, because the next earnings, it still hit. So if you go into the New Year's, yeah, watch out. A lot of people will start taking profits. This is a massive amount of profit from any time during this year. I wouldn't doubt that when the new year turns over, people are going to take profits. They're okay with taking taxes for the next fiscal year. They're done with it, right? January 2nd. Yeah. So watch for anything moving there. So I don't know. Might be over for this. If you're an Axon, this is another stock I recommended. Yeah, maybe this is the end of it too. We'll see. That's a lot of volume last week, but it didn't go anywhere. I mean, this thing could still hold. Now, if we look at other types of stocks like Sprouts Farmers, so this one had a nice trend going. Sprouts Farmers Market, SFM. Yeah, this is a this is the first time you see a good weekly candle like this red. This might be over for this. This might go sideways, or we might just start moving down. So this might be the end of this stock. So I would be watching this. It could be a good thing to enter sometime down the line next year, or not. I don't know. It's going to depend on the halfway point next year. And let's see, Deere, another one. I'm looking for a long-term move here. because this thing has been range bound since 2021. So Deer, DE, I know a lot. It's been on the news for quite a bit because of Trump's threatening to put 200% tariffs on on anything made in Mexico, and he specifically targeted this company. It could be something to watch into next year because it's been since the last earnings. Yeah, it's trying to break out. It's trying to. If it is, then this is going to be a new move up, maybe, or it could just be the start of a big move down. So I don't know. Either way, I'm definitely watching this for long-term positions because we're at a critical juncture. Okay, so anybody that's looking for something in the long-term portfolio, this is one you put on your watch list. See what happens. Intel, I've been talking about this before. It was back at 19. Definitely something to look at for your long-term portfolio. And the other one was Boeing. Boeing's done quite well since it hit its bottom here at 140. BA Boeing. Right. So if you missed that, you can wait for a pullback, see what happens at 156 to 166. See if it hangs around there, then maybe after that it's moving up, because I don't think there's much more bad news you can have for Boeing at this point. Okay, Intel is INTC if you didn't remember. Sprouts is a luxury item. When is it going to adjust? Oh, what's going to adjust? What's going to adjust? I see something about adjustments. What's up, Asvaroon? What's up? Okay, let's see. What else? Okay, those are the ones to cover for that. Let's look at. Oh yeah, SMCI. John Deere is good. So see if TJVA. Oh, okay, what's that? TJVA. Okay, so yeah, what's that? What's TJVA? Specific about that. See, hymns. Okay, I told about 25. That was a good buy. Now it hit 30 today, so it went right back in that range. So I don't know. I'm not really too enamored about biotech stocks anymore since Jerome Powell spoke last week. Since he's very he wants to keep on this hawkish tone, because if you look at bonds, that's a really big determinant on small cap biotechs. So XBI, yeah, this whole sector looks terrible to me. Like, it's been terrible this whole month, and I don't know. I don't like the way it's just dangling around, just doing this thing. Oh man, there's too many parallels to 2021 before they broke the whole thing. Downlink. Downlink. Oh, you just want to come up on here, Ryan? Yeah, hold up. I don't know how long you're gonna stay. I have to go through all these tickers. Let's see. Oh man. Let me see. And I got a bunch of videos to play too. Let me see. Okay. Yeah, IWM would cover that. TLT. And then all right. Oh yes, space stocks. Oh yeah, SMCI. I'm gonna talk about that. So the other thing too was semiconductors. SMCI last week is trying to do its thing. Holding this area at 32. It's coming back up just before Christmas. Yeah, it was the day before Christmas. It popped right here, 34.88 cents. So I'm watching this. It could recover with the whole other semiconductors. So SOXX, right? Semiconductors, it's right back to where we have been going sideways, like completely sideways since November, mid-November. It's just hanging around doing this whole thing where it just bounces up, bounce back, bounce up. I have no idea. If semiconductors can't do anything next quarter, it's not going to be good. Yeah, it's not going to be good. This thing is really necessary to see the NASDAQ go up to a new high if you're going to see that. If not, that's it. We're done. Bye-bye. Bye-bye. Expect a drop in the first quarter with the whole S&P, because the S&P is only being held up by the Magnificent Seven right now. That's it. So, and I see the IGV rolling over. You see that? So we're back to the situation where it's just 7 stocks holding up everything, because 7 stocks holds up 33% market cap of the S&P 500. That's how it is. It's very concentrated. And you see the weakness here with IGV since Jerome Powell was talking. It just pushed it down, but it was already weakening the first week of December. It was already there. So a lot of things are not working right now. The breadth, okay, of the market is weak. Where you see like IWM, small cap, same thing. There is very little that's pushing it up. So right, that's why I'm just showing you guys all these little petty stocks and whatever. That's the only thing you could trade, really, to get any money during these months, if you wanted some. But for me, I was completely over with. I'm done. I was done. Zim is another one. Very good this week. Very good. So it protected itself from dropping down to 17 and lower. That's a good sign. Very good sign. So I think it's going to try to climb back to 30 and pop out. But that's all determined on shipping. If we look at dry shipping index, is still weak. So the Baltic dry shipping, so the global shipping index for bulk goods, meaning whatever's shipped on coal, grains, all that, essentially Chinese dominated. You can tell, yeah, China's not doing well, right? And usually, if you follow this, I showed you guys this before, is that this thing tells you the top of the global economy in some sense, because here this was the reaction in October, and this was a month before small caps dropped, and then that's 2 months ahead of when the rest of the markets dropped, when the bond market just started shrieking out in pain, and before Ukraine got invaded, all that stuff, it just went belly up. Then that's it. So it can be a leading indicator. Okay, it can be. It at times you can use this to determine if there's a recession ahead. So this is telling me, yeah, China's weak. Does it mean the global economy is weak? To be determined. We know that Europe is weak. I think Germany has political issues. France has political issues. Both their governments are completely in disarray because they have, parliamentary politics, meaning that they don't have anybody in full control of the parliament, so they can't pass any laws, whatever. So they're in gridlock. I don't know about the UK. The UK has different issues. So yeah, not good, not good. So it's not hitting us yet, though. We're still strong. China is the problem. China could probably get propped up this year, but then the inflation issue would come back, and that's when I don't know if the goods inflation will come back, hit us hard, and then we're gonna have issues. But I think that's 2 years ahead. All these things take time to materialize. Okay, like that's why gold, like I said, gold sniffs out inflation, right? And that was 1 year ahead. And you'll see oil pop back, I think, based on what gold predicts about oil, because gold is a leading indicator of what oil is going to do. And I'll show this one chart again. Let's see. Let's see where we are. I think nothing's changed here. So this is crude oil follows gold, shifted 19.8 months. All right. So there's a link on the screen, essentially giving you the article where it does this, where he shows the proof. But you can see, like, if I shift gold up, it predicts how oil is doing. So oil is that black line right on top. Like, did gold predict the Ukraine thing? I don't know, but that's always something that really strikes me as interesting, how well it predicts. Obviously, it's not going to be perfect. Like here, it says like, oh, oil should be going down, but it pretty much went sideways. Now oil should be going up, but we've gone sideways. I think the next big move would be in the summer. So if China does do its thing, this would predict the Chinese inflationary bubble here, where it's just going to pump everything up, stimulate everything up, just to like jumpstart its economy. Then that would make sense why oil would start rising at that point, because it'll take time to go through the system. And I don't know if they had a new policy announcement where they went into more specifics, but I don't think they did. So I'm not sure what specifics China is going to do, but they for sure are going to also stimulate the stock market. So not only are they going to try to reinflate their real estate bubble, they're going to try to add it to the stock market too. So this will be interesting. Something's going to pop probably in 2026. So expect something there, because that's where housing prices should peak. I mentioned this before, and we'll probably have to do that. Okay. Yeah, gold goes up with the government, but this is we're talking about way back when. This is 19.8 months. So this is way back when, before COVID. You see gold going up when Jerome Powell did his pivot during COVID. So gold already sniffs out. When the gold just booms like that, it sniffs out inflation coming ahead of time. When they restart QE, they're like, oh, and that's why it doesn't go coincidentally. Gold doesn't go coincidentally. If I push this back, you'll see, like, why is not gold not going up when inflation is going up? No, it's already been done. The move is already done. So if gold is going up now again next year, I would assume that, yeah, there's going to be some sniffing out of another QE or something going to happen, where they're going to make a policy mistake. They're going to rapidly cut rates because they're more afraid of what's going to happen with the economy than anything else. So that's why you got to look at these markets like that. They move in cycles. First, bonds go up, then stocks go up, then commodities go up. They always go in staggered ways. They don't go together. They are staggered. These cycles are staggered. That's one thing to know. Okay, I think I have a chart of that somewhere, but I showed it way before it back in October. Okay, all right. Let's see what other ones we gotta do. So, what other stocks to look at? So, I talked about SMCI and I talked about SOXX, NVTS. Before Christmas, it was up what, 21%. So this is a small semiconductor company, or semiconductor related company. Let's put it that way. So I was saying, like, yeah, if it got down to 3, you would buy it. It pumps back to 4. I think this one might be something to play into next, at least one quarter, maybe. Another one is Aher. I can't even pronounce this thing because I don't even know. Aher, Aher, AEHR. I don't know. Whatever, how you want to pronounce this one. And this one's been trying to get out of this bottom too, but it has earnings right away next week. So I am not really too interested in playing into earnings. But if you got in at like 10, 12, $11, 16, if it can go up to 25, maybe it's just like, yeah, you just sell it. That's up to you guys. And you can leave whatever left over you want for earnings. And earnings is very, very risky play for this type of stock. It lives or dies on a few companies. I mean, because they only have a few customers. So any deviation from what the market will expect, it can just move up and down 20, 30% on a good or bad earnings. It's way risky. Like you can see it here. Like it just does it like 16% down, 22%. This one was a good one. This up 24. Yeah. That's a complete gamble. Okay. But if you play between the earnings, yeah, if this thing rises into the earnings, yeah, perfect. Get out. Okay. So I wouldn't probably play it for earnings. Okay, so those are 2 semiconductors you want to look at: NVTS, AEHR, those 2, and then SMCI. Yeah, of course, that's my favorite because, yeah, I bottom fished this one at 18, right? 18, 17, 18. And if you're really a gambler, you can use SMCX. Okay, that's 2x leverage, SMCX. So you can see all the tickers flying through SMCX. Now we can talk about Bitcoin now. Okay, let's shift over to Bitcoin. It's going to have max pain this week. Now you can see why it's doing this is because max pain, and we discussed max pain last week. That's why you see why the S&P landed where it did on Friday. There's max pain for Bitcoin. I think what is the max pain this time? I think this is one of the largest max pains for Bitcoin. So the options market, let's see, 14 billion. All right, 14 billion. So let me put the link in the chat. You can look this up yourself, and I can put it on screen. Right here. So That's the link, and I'll put up this into, because we're gonna read it. I'll read this. All right, so you'll know why Bitcoin is doing what it's doing into Friday, and that could be a buying opportunity. So I'm waiting to see if that's another buying opportunity. Get one last hit of Bitcoin to move up, and that's the end of it. That'll probably be the last move for until May, and then that, yeah, you'll see what happens. I mean, I don't know if we want to short it, but hold up, no, sorry, I got to put it on the right screen. Okay, here we go. Three crypto titans, BlackRock, Grayscale, and Fidelity dominate 85% of the. Blah, blah, blah. Oh man, they give me. All right. This is the wrong article. I don't know. I hate it when they do the scrolling thing where you just like want to get one article and then it scrolls down to another article. This was the one I wanted to. But this is pretty useful too, because I talked about how much the ETFs now control a lot of the Bitcoin, and that's why you see Bitcoin have sudden moves at close and open of the NYSE. So now you have options controlling ETFs. They got approved, the options for the ETFs that track Bitcoin. So that gives you another level of control from the markets, I suppose, the standard markets. But here you go. Max Pay, largest Bitcoin options, and the thing. All right, here we go. All right, largest Bitcoin options expiry in history to conclude a volatile year. Bitcoin is fluctuating wildly between $92,000 and $94,000 range in a few hours. Blah blah blah. Scheduled for this Friday, that's tomorrow. I think, depending on the market, it'll probably be overnight. Maybe 2 a.m. My time. So yeah, sometime about maybe 5 a.m. Eastern. I don't know. Let's see. Scheduled for this Friday, 14 billion in Bitcoin options open interest is set to expire. 14 billion BTC options expiry looms a game changer. Yes, in a note, blah blah blah. Bitcoin.com news. Luke Sturgis. Deribit. So Deribit is probably the largest options market for Bitcoin and Ethereum. CEO disclosed that put call ratio for the expiry stands at 0.69, reflecting 7 puts for every 10 calls. He noted that December's expiry dwarfs others with 146,000 contracts outstanding, double the next largest expiry in March 2025, which holds 73,000 contracts. Sturgis explains that this Friday expiry represents 44% of the total Bitcoin options OI, open interest, which currently amounts to 32 billion. Deribit, the world's leading crypto options exchange, has highlighted that more than 4 billion worth of these contracts are expected to expire in the money, a development likely to trigger significant trading activity. So if you look here, if you look at this, you see that? Max Pain is $84,000 per Bitcoin. So what that means is that there is pressure to push it as close as possible to 84,000. Just like last week with the S&P 500, they want to push it to a certain price to maximize as many losses as possible for the people that buy options. So the people that sell options don't want them to be in the money, right? So this is where we've been doing. And that's why Monday you saw that big drop all of a sudden. Yeah, I think there is pressure, especially with lower trading volume this week because of the holidays. It's a lot easier, right? So that's why you see a lot of this barting. Whenever you see Bitcoin just move up fast and then go down fast, and just have this straight line where it goes nowhere for several hours or a day or two, that's what's happening. The liquidity has gotten weak. There's very low liquidity, and so it's easier to manipulate right now. And I wouldn't be surprised if it just touched briefly 90K overnight tonight, and that's probably the time where you would be like, okay, I'll take a chance. I'll go long, okay, I'll go long, and see if I can make some money into New Year's and then jump out again, because maybe that will be the springboard to try to get one last chance at 103, 108,000 on Bitcoin. And then from there on, yeah, it's just downhill. That's it. We're done. We're done. We're done with this whole move. But if it lasts longer, then yeah, maybe 112, 113,000 first week of January into the second week of January. Yeah, it's possible. But for now, this week, you got a lot of pressure from this max pain. So hold up. If you want to get long, wait up. And that's going to affect everyone else, right? And I see the other altcoins, they're struggling too. I think this thing is a liquidity trap, because it's just taking away a lot of potential for the other altcoins to move anywhere. So while 2024 has been a bullish year for Bitcoin, uncertainty clouds the upcoming expiry. Heightened volatility reflected in sharp fluctuations of derivatives devol index underscores the precarious market sentiment. The much anticipated annual expiry is poised to conclude a remarkable year for the bulls. The Deribit CEO added, however, directional uncertainty lingers, highlighted by heightened volatility. Okay, yeah, I already read that. Sturgis also remarked that the previously dominated bullish momentum has stalled, leaving the market highly leveraged to the upside. This positioning increases the risk of a rapid snowball effect if a significant downside move occurs. Yeah, no shit. All eyes are on this expiry as it has the potential to shape the narrative heading into the new year. This historic expiry carries implications beyond the intermediate, providing critical insight. Blah, blah, blah. I think that's some AI, right, and all that stuff. Anyway, you can go to this website, go to CoinGlass. Okay, go to CoinGlass, and you can get the max pain yourself. Go to this website here, CoinGlass, or you can go to Deribit website. You can get the same information, but here is pretty convenient. You see this? You see this? So you can see the whole area where all these contracts in the future, and this is the future here. This is what the expiry right now we're in. Max pain 85,000. The value of these contracts are 14 billion. Okay, so this is for this month, right? The last month of the year and a quarter month, right? So the third month of a quarter. That's why always the third month is always important. And for the SPY and all these other ones, the stock market and bond market, they do the third week of the third month. And that's where all the important stuff happens. Now, for Bitcoin, Ethereum, it's the last week. So the final week of the month, that's always this thing would happen. So yeah, let's look at Ethereum. Ethereum max pain is 3,003.74, so billion in value. So it's not as big as Bitcoin. So Bitcoin's always still the monster within options. But you can see the next contracts for each week after that. Okay. All right. So that's a good refresher. I think you guys know about max pain. If you didn't know, watch what I talked about last week. So that's why I'll explain to you what was happening with the stock market, and you'll see what happens with Bitcoin on Friday. We'll see what happens. And then after that, jump in, get your trade, get your final trade in, and, make a little money there. That's it. So let's see what happens overnight. I think, yeah, I'll watch in the morning and I'll make my bets from there. So if we want to do the morning bets, let's look at some stocks to follow. All right. So if you're using the stocks to track Bitcoin, I always like MSTR. So I was playing this one. So it goes down here, you buy, goes down here, you buy, you go up here, you sell, go down here, you buy, you go up here to sell. That's what I did. I did it twice. Now, I'm not comfortable shorting down here because I'm more comfortable shorting up here. And I missed this one because I was just like, man, I'm not gonna be greedy. I got my money. Forget it. I'm not gonna take a chance. And by that time it was too late because it went down too quick. Because on Tuesday last week, it just completely didn't even bother to try to get above this rectangle zone. So this rectangle zone is so important here right now, the way it's acting. So you rather get long here, get out here, long here, get out here. Now the next time this thing gets close enough down to like 333, 324, you get long again. And if this max pain stuff passes, you get long and you try to jump out at 400, like right here. And then if you really just want to leave some on the table, leave some on the table to see if it can get back up here and then get out completely. Now, if it can get moving further, this is going to be a real big kill shot, because once it breaks out here, it's going to fly to 600, like really crazy. But that's only if Bitcoin doesn't get stalled out at 108,000, okay? If people are going to chase, they're going to get greedy. They're going to be like, a lot of these people next year, they're going to see Bitcoin. If they see Bitcoin try to get to 108 and then break through 108, go temporarily to like 112, 113, 115, something like that, boom, you could get a real good move. So pay attention down here, because if that doesn't happen though, if it fails at 108 again, 1,000, it's gonna try get up here, and then whoosh, it'll flush. You want to go short real hard, like MS. You just want to short this thing all the way back down to like maybe 200. Yeah, because even if Bitcoin goes sideways, this thing could just completely collapse really quickly. There's gonna be a lot of people trapped. So that's my game plan for this thing. So this thing could be a real good payout trading MSTR if you trade it correctly. Okay? Because the last time I really went hard shorting it was here. You know, so you could tell when there's a big reversal, it's fast. It will just go way fast. And last week, yeah, same thing. It's like it knows it can go down. So you just want people to get trapped right up here. All the greedy motherfuckers, they get trapped here right above like 450, right, to 480, 500. And then if they get really trapped though, when it gets to 600, woo, that's a lot of powder. That's when you just take the big gamble, you know, and short the hell out of it all the way back down. This is the end. That will be the end. But for now, do not be playing short here thinking like it's just going to collapse down, because I don't know. I highly doubt it. It's gonna be that easy. So it's always a game. It's always something like that where they just make it too tempting for you to feel like, oh yeah, this thing is over. This is gonna be easy short here. No. They'll shake you out. They'll shake the greedy shorts here. Then they'll trap a bunch of greedy bulls up here, and then you can go down. That's always how it is. It's always multiple steps. It's never like something so easy. Okay, so that's how you do it. Now, if you want to short, I use MSTZ to short. MSTZ. So that's 2x inverse. This will be the way to short it. And I told CKJ3 because CKJ3 told me that the options for this MSTR is too expensive. So yes, try to use these ETFs and play them correctly. So MSTX for the long. If you want to be a bull, MSTX. You want to be a short, MSTZ. Good luck. Okay? Good luck. Because I think this can be tradable really well. Now, the other thing to go long on, I use BTDR. Man, this thing is beautiful. Very beautiful. Because today it was kind of going down a bit because of Bitcoin, but it still went up. So it's still positive today, even though Bitcoin is down. This thing, you know, the way this thing is shaping up is very similar to a lot of the small cap stocks I'm going to talk about as we go on. So BTDR, Bitcoin miner. So I really haven't seen any improvement in the other ones like Mara and CLSK, because their earnings, after they report the earnings, and yeah, it's terrible because they issued more stock. There's a lot of pressure pushing it down. And if you look at Riot, same thing. It's just like, nah, bruh, this stuff is not the game. So BTDR, is a definitely an alternative play to go long on. And this was right in earnings right here, the way it moved. So you can look at it. When you see earnings and you have a dip and then a recovery like this, and you stay in this sideways where you just don't care, and then that's it. Then you just start rallying. Okay, okay. I have to say that this one is a stronger candidate, and you can see how similar it is to a lot of the space stocks. So we're gonna look at space stocks right now. Rocket Lab, RKLB. See that? Perfect. It was in a range, so it was moving up. Okay, into December. December it went nowhere, and now we're going to New Year's. It's trying again. It's trying. I don't know. I got to see what's going to happen next week. But the way it's moving now, I would not be surprised this thing just blew up another 100% for no reason. Like, there's so many stocks like that because it's just like sound, right? You just look at that. If there's enough momentum, people will just chase. That's just how it is. So Rocket Lab, RKLB, and then we have another one. I think, let's see what's on my list. Rocket Lab, Lunar. Yeah, Lunar. LUNR. Intuitive Machines. Okay, LUNR. Very well. So before Christmas, it did this. Very high volume. It popped, it dropped, but it didn't make a new low from the previous day. So this was just before Christmas. Short day, right? It's gonna be like, right. This is Monday, and then we have the shortened week. I mean, shortened day on Tuesday. So Christmas Eve, it still popped, taking over this one, and then it pops again. Yeah, okay, that's it. When you see all these signs, yeah, I gotta say something's gonna happen next week. So I'm gonna be definitely watching this thing, and once the New Year's hits. So January 2nd, pay attention how this thing trades. January 2nd, these things may continue their move up. Okay, another one, Mobileye. Yes, Mobileye is dancing at 18. This one. It wants to go higher. So if we look at the other chart here, let's look at the weekly. See this? I think this might be a good favored stock for next year. Unless the Nasdaq just completely craps out too early in January, but this might actually be a good trade for the whole year, because this thing could move from this $19 area, go back to 40 or something. At least try for this towards the end of the year. So yes, pay attention to this one. Okay, and they do sensors for automated driving. Okay, they do lidar. Yeah. Intel used to invest a bit in it, and I believe Tropes mentioned Lyft, putting some of their stuff to work. Now let's go look at the biotechs again. So I talked about HIMS a bit. Yeah, see how it goes at 30. I might do a bigger play for it, but I gotta be more convinced about the whole sector. And then RXRX, kind of halfway between AI and pharmaceuticals, because they use AI to develop drugs. So I played this thing below 6, right? I told you guys about that. I got a chunk of it out here when it hit 9. And then when it tried to do this move, now it's back at 7. But here, let me put it on this chart. Hold on. Because here I drew the squares, rectangles, I mean. See this rectangle between 6.30 and $7.70? You see that? This is the area where it just fights all the time. Fight. Because once it's done with this, I'm hoping next year before earning, I don't want to hold this for earnings, but I'm hoping like there's enough energy stored that it'll just go right to 13, right towards 13. It's done goofing off here. So we're going from 6, 7. Yeah, we're going to 13 to 16 right there. That'll be perfect. Then you can just get your trade out. You're done with this one. Okay. That's what I'm hoping for. Might not get it though. Talk about Zims. Oh, GameStop. Okay, GameStop. Yeah, look at it. See, now it's trying, right? It was playing around here. It was playing around here for a month. Now it's breaking out. I don't know what's gonna happen in New Year's. Now this really depends how well everything else goes for small caps, IWM, ARC. People, yeah, look at ARC. This is Kathy Wood stuff. I don't know, and kind of like Tesla too, right? If Tesla's still bullish, Tesla is still bullish. Yes, it's still bullish, and I see that. Like I put this chart up here. Yes, it's completely building this whole area. Boop boop boop. That's it. And I think my target, if you go back, I don't know which video I did. I said probably 700. Okay, that will be the first target, $700 or something around there. That will be my target for Tesla. And if you're doing Tesla, yeah, you can use leverage too, because there's an ETF called TSLL, which does 2x. So if you're not doing options, yeah, you can use this one, TSLL, to do 2x on Tesla. So let's see if Tesla really wants to do something next quarter, because we already staying above 400, doing a good job holding that area. And then if it's going to 700, so that's, yeah, I mean, I don't know, maybe that's too optimistic, but I'm gonna wait and see, especially since Trump's there, right? I'm sure there's gonna be a lot of talk with Elon. Definitely a stock to play when Elon's around. Okay, what else? MDE, JK. Oh, JKS. This is solar stock. So I was talking about this one, how it's going around 23. I'm expecting this to break out the box. So it is Chinese solar. So double hit, right? Solar stocks terrible. China terrible. So now we're going into a new year. And you had a lot of people probably buying this thing since $70 or whatever. They probably gave up here. They probably sold when it went down to 17 in August. Now we get new people coming in, new blood. There's probably people that are wondering, okay, what stock should I buy that looks cheap? Yes, this looks cheapish, right? You can always buy stocks that are cheap, but they still go down. But at least it's the new year. I think most people have sold. This thing is building energy, but it's very volatile. Very volatile. It's not something you would hold comfortably because, yeah, look at this. One day when you get earnings and then it jumps up 32%, but then a few months later, it just loses all of that gain. So, right. Okay. It's not something people tend to hold. They don't want to hold. But if you're very non-risk averse, I would say, yeah, this could be something to play with, at least for maybe a quarter or two. I don't know, because when you look at China, see, this is what I was waiting for. Okay, so it had its bump up early December, pulls back. It's trying again for that 31. So this is a large cap FXI ETF. And then you look at the K-Web, this is their NASDAQ. It looks a lot worse with the NASDAQ version of the Chinese market. It's still stuck here. So watch this one. And then if you watch the K-Web, the FXI, you see what China's doing. And then you look at the JKS, right? And then you say, all right, when they turn, if I time it right and get in at the right moment, I can just get a real quick jump, probably to $50, maybe. Okay. And that'll be the trade to make. So eye it, put it on your watch list. Yes. Now, KC is what probably my favorite Chinese stock. I don't try to recommend it too much though, because it's so risky. But the good thing about it, it doesn't follow the other Chinese stocks. It just mostly follows AI, And now we've been doing a good job holding above 7, touching this area 10, and we're going to a new year. Okay. And this red candle here back in January 2022 sets a tone, because once it breaks 10, it'll go fast. There is no history of it hanging around between $10 and $28, $30. If this thing breaks, it's just gonna fly really quickly. So for a trade, KC, put that on your watch list. So pay attention. Pay attention. For a trade, this is perfect too. So JKS and KC for Chinese trading, yes, these are two I'm watching. So for some quick money, that's the way to do it. Okay. Let's look at Upstart. Upstart, financial tech, fintech. It's been fighting this area at 72. See what happens in the New Year's at UPST. Okay, this is AI loans. So AI will do this loans. I mentioned this before. PLG, mentioned it on the other stream, looking at Palladium. It's done very well this week, up 20%. I think finally I can trust that this could be the bottom of Palladium and Platinum. So watch gold and silver, see if that does well. Platinum, Palladium should follow next year. So this one, yes, put it on your list. PLG is $1.40, probably the largest of the Platinum, Palladium stocks. The other ones are really penny stocks, very low, like few cents or something. So that's higher risk. I'm not going to talk about them. This other one, ZJK, this is a new one, and it got pumped in December 3rd because they have a news about Nvidia. So I've been waiting for this thing to come back. So this was before the pump, got pumped on news because Nvidia was using their whatever, I don't know, that was their customer. It got quickly jumped up like that. Now it's recovering. Okay, so I'm gonna watch this for the new year. This might be a good play to make if Nvidia and all of them, the semiconductors, do well next year. So that this will be an alternative to SMCI. So anything related to Nvidia with AI, yeah, you got SMCI is one, right? So this thing, I assume, can try to make it to 40 with the rest of the semiconductor index again. And if we're lucky, 60, whatever, that's when I'm done with it. I'm gonna be done with this stock. I'll be done with this. I have doubts that it could ever come back to 90 or 100. I think those days are over. So we got that play from 18 to 40 to 50, whatever. Yeah, you got that. Now we're gonna try one more time doing 30 to 50 to 60, and that's it. We're done with SMCI. And if you're doing something higher risk, yeah, we can do ZJK. Okay, ZJK. This is something I'm gonna add to the list because it went up 23% today. And it went on Monday up 13%. So I think we're done. I think it's going to try to hold $7 to $10 for a while before trying again to go up. So let's see. And then KC. Okay, I'm done. I got through all the tickers I needed to tell you guys. This is my list. Everything's listed down there at the bottom. This is what we're gonna trade. All right. And I'll try to see what happens January 2nd. I'll come back on January 2nd and be like, oh, well, everyone's going crazy again, and maybe I'll change my mind. But if nothing goes wrong, then yeah, continue until January 10th. That will be when we have the next piece of data for the Fed, the unemployment data, the payrolls data for December. Because now every piece of data matters. Every piece. Because you can see how quickly things change, right? Because last week, Wednesday, everything was collapsing. People were freaking out. And then once Friday hit, when we got that data, we just moved all the way back. So S&P 500 pretty much recovered all their losses. See? So you got to know the zig. You got to know the zag. Now we're going to get into the New Year's. I'm going to see where the zig and zag is for the next month and quarter. That's going to be so important. All right. Got the max pay and stuff, whatever. Okay, now I'm going to play some videos. Play some more videos for you guys. Let's see what videos to play. Bond market. Yes, we have to know about the bond market. That's so important. Okay. Always the bond market.
Less reason to be bullish this market? Let's ask Chris Harvey. He is head of equity strategy at Wells Fargo Securities back at Post 9. It's good to see you.
Good to see you, too.
How would you answer that question? Less reason to be bullish?
No, I think in the short term, you're a little less bullish. The Fed didn't quite cancel Christmas, but they did cancel the Santa rally. But if you look at it, you still have the same things in place. You have a stronger economy, you have good fundamentals. The Fed is going to ease next year. M&A activity is going to start to come up, and we're having a looser regulatory environment. So it's all still there. It's just in the short term, you have a little bit of volatility, and that happens.
All right, let's take this piece by piece, because the Santa Claus rally is technically supposed to start tomorrow, go into the first few days of the year. But you're suggesting you don't think we're going to get it?
No, I think, our price target is still around a little bit higher than 5,800. We're slightly above that. I think that's about right.
58.
58, yeah, 58. I'm sorry.
No, that's fine. You said 58. I just making sure I heard you right.
Yep. And so why would you rally the market right here, right now? One of the things that you actually have is you have refundings, or you have auctions, right, that are pushing up yields. That's going to weigh on equities. You had the Fed say what they said, and a lot of hedge funds have gone home for the holidays. So there's not much reason to get excited. That's fine for next year, because next year maybe we start, with a pretty good pop out of the gate.
You think the Fed's a big risk next year?
I don't think it's a big risk. I think it surprised a lot of equity people. I think people were a little bit too aggressive, a little bit too bullish. But I think the Fed will continue to cut rates at a moderate pace. They're going to normalize rates, which is what they're saying, and that's fine. As long as we have the Fed easing, which they said they're going to do, I think that's a good thing, right? Because, again, the backdrop is pretty supportive. The macro is pretty supportive. You have economy that's stronger than expected. You have fundamentals that are still improving. Valuation is high, but you're paying for growth, and you're getting double-digit, or we think you're going to get double-digit growth next year.
It's funny, the bond market essentially pulled the Fed to it.
Yeah.
The stock market may have been a little over its skis.
Right.
The bond market wasn't, because interest rates had moved up substantially from the cut in September to now.
Scott, that's a great point, right? Because this is not our first rodeo. And one of the things we keep saying to ourselves is, what is the Fed watching? And it does appear to be that the Fed is watching the market, then the market does influence the Fed, because we had a 50 basis point cut back in September. What's the difference between now and then? Well, where were 2 years at that point in time? They were 150 basis points lower than where Fed funds were. Where are Fed funds in 2 years? They're almost on top of each other at this point in time. So I think the Fed really does pay attention to the market, or the bond market per se, and that does have a pretty good influence on it.
I mean, I remember when I was sitting at Jeffrey Gundlach's office doing that Fed meeting in September, live in LA, and they do the super cut,
right,
and rates go up.
Yeah.
And it was like, oh, that's an interesting move, maybe something to keep an eye on.
Yep.
And here we are where we are. Now, people are making a whole bunch of predictions for the new year.
Yeah.
There were some out today from Apollo's Torsten Slok, who says of this conversation we're having, 40% chance inflation picks up, 40% chance the Fed raises rates, 40% chance the 10-year goes above 5. Let's say we don't think we're going to hike, okay?
Right.
But if the 10-year goes 2 or above 5,
Yep.
we got a problem in the stock market?
We will have a problem for a short period.
I mean, this is interesting. 90% tariffs are coming. Okay, yeah. 90% Nvidia disappoints, I guess, on earnings. Okay, yeah, interesting. Yeah, 75% M&A IPO activity, 85% animal spirits. I mean, you gotta be more specific about the animal spirits here.
Time, right? So it depends on how it gets there. If it's a short move higher, similar to what we had in the summer of 20.
Okay. I don't think you guys know about R-Star, what R-Star says. I don't think that matters. But if you guys want to look it up, you can go look up R-Star. Fed stop saying R-Star was so funny. That was like such a funny thing people talked about back in the 2021 days. They were always talking about R-Star. I don't think you ever hear that anymore. Inflation accelerates 40%. Fed raises the rate 40%. Yeah, 10-year rising above 5%. I mean, once you start seeing people talking like, oh, 10 years the 10-year yield, treasury yield is gonna go above 5%. That's probably not gonna happen if too many people talk about that. Okay.
This is not our first rodeo. And one of the things we keep saying to ourselves is, what is the Fed watching? And it does appear to be that the Fed is watching the market, then the market does influence the Fed, because we had a 50 basis point cut back in September. What's the difference between now and then? Well, Where were 2 years at that point in time? They were 150 basis points lower than where Fed funds were. Where are Fed funds in 2 years? They're almost on top of each other at this point in time. So I think the Fed really does pay attention to the market, or the bond market per se, and that does have a pretty good influence on it.
I mean, I remember when I was sitting at Jeffrey Gundlach's office doing that Fed meeting in September, live in LA, and they do the super cut,
right?
And rates go up.
Yeah.
And it was like, oh, that's an interesting move, maybe something to keep an eye on.
Yep.
And here we are where we are. Now, people are making a whole bunch of predictions for the new year.
Yeah.
You know, there were some out today from Apollo's Torsten Slok, who says of this conversation we're having, 40% chance inflation picks up, 40% chance the Fed raises rates, 40% chance the 10-year goes above 5. Let's say we don't think we're going to hike, okay?
Right.
But if the 10-year goes 2 or above 5, we got a problem in the stock market?
We will have a problem for a short period of time, right? So it depends on how it gets there. If it's a short move higher, similar to what we had in the summer of 23, then the market will trade off, but then I think it'll get back on its horse and move higher. If he's right, and I don't think he's right, if inflation does go sustainably higher, then yes, we have a little bit of a problem. If that helps earnings, okay, some of the stocks will do better, some of the stocks will do worse. One of the things that you're seeing over the last couple of weeks is your more levered companies are really having a difficult time. Your smaller cap names, your more levered companies, and those are the ones that aren't bouncing today. Your growth names are bouncing, your higher risk names, and those are the ones that I think will perform better in that kind of environment.
All right, let's do some AI news, I think, here.
Muse, Cantor Fitzgerald analyst, joins us now. You do have a buy rating on that stock, $200 price target. Welcome. Let me just quickly get your reaction to the news related to Qualcomm, since you cover it and you only have a hold rating on it. How meaningful is this?
Well, you know, I would say that, you know, obviously ARM is trying to juice up the royalty stream. And, you know, I think that on the other hand, Qualcomm, you know, has been very successful in court over the last 4 or 5 rulings, whether Apple or everyone else. So I think, you know, it substantiates NVIDIA, it substantiates their track record on the legal front. But, you know, at the same time, it doesn't change, you know, the challenge for them, which is that they're most heavily levered to smartphones and that the diversification strategy is going to take some time. But clearly, you know, on the margin, you know, a positive for them.
Is this still, now as we take it towards NVIDIA, I mean, is it just still NVIDIA's world and everybody else is just living in it? And is that the way it's going to be for the foreseeable future?
You know, I think that, you know, when Broadcom reported and Hock Tan, you know, outlined the vision for custom silicon, that was a change statement in the market, appreciating how the world is led by and dominated by NVIDIA, but that there's also a rising tide here for custom silicon that will help the likes of Broadcom and Marvell as they support, in Broadcom's case, you know, Google, Meta, TikTok, and in Marvell's case, Amazon and Microsoft. So, you know, there's definitely different spots for the different kind of areas of silicon. But, you know, at a very high level, as you think about NVIDIA going into their best product cycle in the history of the company with Blackwell, you know, it's hard to not, you know, think of them as the top outperformer for all of semis in 2025.
But how do we know how long the cycle is and how many quarters we could see growth like this? How does it compare to other previous semiconductor cycles?
Well, this cycle is unlike any other. You know, I think most investors look back to the advent of the internet and how long kind of the internet infrastructure investment cycle played out. But this one's very different, right? Where the companies that are making the investments, predominantly the hyperscalers, you know, they're generating meaningful free cash flow despite, you know, spending hundreds of billions of dollars building out AI. And let's be clear, this is existential for these companies as they all try to get to AGI. And so I think this is a multi-year investment cycle. And, you know, just on Friday, OpenAI released O3. And this model is incredibly important in the sense of the improvements that they're making, the reasoning that they're using. So it's post-training reasoning where the more compute you apply to the large language model, the better the outcome. And really the big takeaway is that it's driving even incrementally more compute requirements to get to AGI. So the short answer, I think investors are going to be surprised by the magnitude and duration of the investment in AI. And I absolutely believe that, if there is a pause for NVIDIA, the first we would see it would be 2027. And if I'm right with that assumption, then there's clear line of sight for growth for the top AI accelerator companies. So NVIDIA, Broadcom, Marvell, I would say the key arms dealers underneath that, whether it's TSMC or ARM or, semi equipment players or test companies like Advantest and Teradyne. So I think this AI investment cycle really has legs.
All right. I guess if you believe that. Let's see. Zillow. Okay, Zillow talks about the real estate market next year. Okay, let's see what this one is about. Let's see what this one's about.
Zillow is sticking with its optimistic 2025 housing forecast right now. Orphy Divongi is Zillow's senior economist, joins us right now at the take. And Orphy, this interest rate story is one that's going to be of a particular interest to home buyers out there. So what is the forecast for rates next year?
Yeah, look, we all tend to overreact a little bit to economic news. Higher productivity means the economy is strong, but it's also slowing. I think slower growth than anticipated in 2025 could actually result in more Fed rate cuts than currently anticipated. Yields and mortgage rates could potentially ease somewhat. And so with lower mortgage rates, easing mortgage rates from where they are right now, we expect home sales to actually increase in 2025.
If home sales are going to increase, where are we going to see most of the activity, Orphy? Is it going to be in the previously owned homes, existing homes, so to speak? Is it going to be in all the new construction that people are trying to put on the market?
Look, I think new construction will continue to dominate. We saw new home sales increased again in November, despite the increase in mortgage rates. The mortgages have been increasing somewhat since I think September, October. So new home sales are up 9% from a year ago. We should see existing home sales also rebound somewhat, maybe not as much. Homeowners are starting to come back on the housing market. Inventory is up about 17% from the previous year, from last year. And so more options for buyers, a little bit more bargaining power, a slight improvement in affordability could be good for the housing market. It's going to be a healthier housing market in 2025.
Orphy, are there specific geographies that you're keeping track of as to be where will be hot and where will be kind of colder, relatively speaking, in the U.S.?
Yeah, I think, look, you have markets that have built a lot. So those markets are kind of the Austin, Texas, some of the Texas markets. You have the Florida markets where inventory is much higher than it was before the pandemic. I think those markets are going, with more options, those markets are going to benefit somewhat in terms of sales, total sales. I think that's probably where we're going to see a little bit of an increase. You also have markets near these big job centers, like these expensive markets like New York and Boston. Markets surrounding those areas, slightly more affordable, could also see an uptick next year.
Orphy, when you look at the geographic locations of the housing, how much focus are you putting on back to work, where now companies are not demanding but asking in a very firm manner for employees to be in 5 days a week? Do you think that's going to put pressure on homes, on secondary homes that people bought during and after the pandemic?
Yeah, if you look at the data, our data, Zillow surfers, where are Zillow surfers looking? They're definitely looking closer to those job centers, right? We're looking at places like Sunnyvale in California, slightly more affordable than Palo Alto, for example, right? Some of those markets are starting to see a bit of an uptick in the number of people searching in those markets.
Okay, so I think the Fed, I mentioned this before in the mainstream think the Fed's going to realize they've kept it too long. Again, they'll keep the rates a bit too long, right, into next year, probably summertime. They'll give up and they'll start cutting, and then they'll realize maybe towards the end of the summer they really screwed up, and they'll start cutting even more. So then we'll get one more big blow off, probably in housing prices into 2026. We'll get a big surge in buying because the mortgages will start dropping like crazy. Okay, that'll be probably the best time to buy bonds. So if you're looking to buy bonds, that'll probably be the place to go for it. You can buy bonds now. If you did the TLT, TMF, ETF, you can get your little 3%. It's not going to be 3%, okay? Because if TMF is actually quarterly, so you'll get essentially 3% divided by 4, okay? Whatever that is, if depending on how many shares you buy. And then if you did the TLT, it'll be 3% divided by 12, though. So it'll be a lot smaller if you did TLT. So if you're expecting a little dividend payment, the last one before the year's over, yeah, you could jump into bonds right now, see if the bonds yield for the 10-year does not cross over 4.8%. Like, let me see what it is right now. US 10-year is 4.585% right now. I really doubt it's going to try to hit 4.8 before the year's over. And it might crawl back next year. I don't know. We'll see. So that could be a trade to make too. If you want to do bonds, yeah, you can buy bonds now. See, if you want to guess that this is the highest it'll go into next year and roll over, yeah. And you'll get your dividend if you use TLT or TMF ETFs. Okay, so TLT is the 30-year bond ETF, and TMF is leverage 3x TLT. Okay, let me put that in the chat. All right, so you can make a play for that. You can do a trade. I think that's reasonable. Yeah, you could do a quick trade that way. So you can hide out there if you have cash, and you don't want to do any of the crazy trades I've been mentioning. Yeah, you could do that trade. That's probably a good swing trade into at least the first full week of January, and then get out by the 10th. Okay, yeah, you could do that one. Okay, so yeah, Bitcoin's trying again. All right, let's see. Now, what's the next video? Chip stocks, oil and gas, geopolitics, and then finally I'll do Palantir. I'll end it on Palantir. It's going to be a long one, this Palantir video. So you can stay for that if you want. So chip stocks. Yeah, chip stocks. Okay, do the chip stocks.
Market action with Ariel Investments Vice Chairman Charlie Borbrinskoy and Henian and Walsh Asset Management President and CIO Kevin Munn. Thank you both for being here. Kevin, let's start with you. So chips leading the way, very decent performance for the NASDAQ. Lighter week, of course, with the holiday and so forth. But what's your read on today's action?
I think today's rally in chips should remind all investors that the AI revolution is a long road, and there's going to be many ups and downs and many potholes along the way. And semiconductors and chips will likely remain a critical component of the overall AI ecosystem, but not the only component. Let's not forget about energy, data centers, hardware, and software. And then, of course, NVIDIA is not the only semiconductor and chip opportunity that's out there. Look at Broadcom, look at Advanced Micro, look at even Intel. All priced pretty rich right now, but all have more growth ahead. And if I can remind everybody watching right now, NVIDIA is going to become the hub of the AI ecosystem. They have very aggressive delivery schedules ahead with the Ultra version next year at Blackwell, and of course Rubin and the Ultra version of Rubin coming in 2027 after that, plus their continued growth in data centers. I wouldn't bet against NVIDIA.
Well, and of course they're comprising such a big part of the overall market as well. Charlie, I want to turn to you. Given kind of what we've seen with NVIDIA, what we've seen with chips this year, which there's no way to really describe the market action in 2024 without them, would you be rebalancing your portfolio now in anticipation of 2025? And if so, how?
Yeah, if I owned a lot of chip stocks in NVIDIA, I would absolutely be rebouncing. I mean, at this point, it is very dangerous to own stocks where they are so popular. I teach classes at a couple of 8th grades, and the one thing that these 8th graders all want to do is own chip stocks in NVIDIA. They tend to want to own what's worked in the past and don't care a lot about valuation. I'm not saying at this point I would sell it all, but clearly there's a very high expectations in these names. We're contrarian investors. We try to buy what hasn't gone up, and clearly semiconductors are not that.
Yeah, Charlie, I mean, I know that's typically your stock and trade. It's your temperament and orientation is to look at what is not appreciated by the market yet. It's paid off over time, but it's been tough this year. It's a very uneven performance, even though it's a very lucrative year for the second straight year for the indexes. Do we have the ingredients for more cyclical stocks, value stocks to start to work, given this rethink of what the Fed's going to do and just maybe a little bit of a stutter step in some parts of the economy?
Yeah, as you know, Mike, it's tough for us value investors to make short-term predictions. We don't think we or anybody else is good. But the core answer to your question is the ingredients are there. We have very high quality value names trading at very reasonable prices when the rest of the market is very expensive, when interest rates should be coming down, and when there are some negatives that could start to go away. We could start to have the situation in Russia, Ukraine get a little better. We could start to have the situation in the Mideast, which has been so fraught, get a little better. But we have great companies like the Goldman Sachs's of the world and a lot of energy names and building materials names trading for very reasonable multiples. So the ingredients are there, but it's been tricky versus growth.
Stocking stuffer special. Let's focus on energy now, which is one of only 2 S&P sectors lower on the year. Materials being the other. Pippa Stevens joins us now to break down the different parts of the energy sector.
Yeah, so
oil and gas.
Yeah, so let's start there because energy stocks are the second to worst sector so far this year. And looking into 2025, there is a lot of uncertainty around oil's price direction, thanks to possible tariffs and sanctions, as well as non-OPEC supply growth, meaning there could be a shift from oil to gas-exposed companies where the outlook is better, thanks to the dual tailwinds of LNG growth and generative AI. Newly created Expand Energy, which comes from the merger of Southwestern and Chesapeake, is the largest gas driller in the U.S. And then, of course, you also have to move the gas, which is just as important. And Kinder Morgan is one name to watch in the midstream, since it is the largest pipeline operator. It is really hard to build new pipelines. And so infrastructure that's already in the ground is definitely seen as a premium advantage.
Yeah, I think if you look at the places that have outperformed this year in a difficult year for energy, clearly you're seeing it both in some of the places where there are renewable dynamics, but really it's a case of people looking to who has the technology and who's really succeeding.
This is the year that a lot of folks rediscovered nuclear power. How does it play into an investable idea?
Yeah, so nuclear really took off this year. It was the year of nuclear power. And next year could see even more announcements between the industry and big tech, although there will also need to be progress on getting some of these small modular reactor designs off the ground. Independent power producer Vistra has been a big beneficiary since they own the second largest competitive nuclear fleet in the U.S. and could sign a very lucrative deal with the hyperscaler. But it is the second best stock in the S&P this year, and after tripling, it might have gotten a bit ahead of itself. Cameco is another name to watch. They're really the one-stop shop nuclear company since they've expanded beyond just mining to other parts of the nuclear fuel supply chain and now own 49% of Westinghouse, meaning they also have exposure to that AP1000 commercial scale reactor.
Yeah, and Pippa, you did an excellent deep dive a couple weeks ago. And the story really around nuclear, to me, is about a structural deficit that's going on and a case where U.S. is almost one of the most aggressive countries suddenly in terms of exploiting. The question really for Cameco is, and for investors, is what do you want to pay for this company? Because there's extraordinary growth potential, but you've priced in a major, multiple here. So it really is more about the opportunity. I've been investing in nuclear probably for 20 years with a lot of volatility. And I think that's critical for investors to understand. This isn't a straight, move higher. There are a lot of structural issues to work out.
So you did not rediscover it this year. You've been in it for 20 years.
It's time to take a look.
I have no basis for this, but I do wonder if the massive demand forecasts that are embedded in a lot of these, when these nuclear projects start to pay off,
are going to come to pass, right? Right now, we're extrapolating the AI demand curve. We'll see, obviously.
Yeah, I think
and that's part of the risk.
Well, the spot uranium market has been part of the fun here, right? You've seen a massive move in the spot market going into 24. It's actually struggled really for the last 12 months, but it's a case where I think there are a lot of utilities that are probably quite short.
And AI is only one of the tailwinds. There's also just electrification and reshoring
That
and
is
other
true.
things. So it's one part of the story.
Hey, so I mentioned some of those tickers before. Okay, I'm not gonna go over them right now. We'll probably do a nuclear or lithium or something show where we talk about it. But right now, let's just look at natural gas since we're talking about energy. So as I said, this area is critical here. So this is spot gas, $3.4, all right, versus 3.6 right here, $3.60. I mean, I don't know. Today might be the day where it starts moving down. All right, so I like I said, watch natural gas after Christmas. I might go for a short right here. So cold is up, KOLD is up 9% today. This might be the bottom for cold. Cold is the bear ETF, inverse ETF, short ETF. So if you want to short natural gas, use KOLD. For all those guys I was talking about, like UNG, I made a mistake. I was talking about UNG as if it was gasoline. No, this is not gasoline. This is natural gas. Yeah, you might want to think about getting out. This might be it. So tomorrow they're going to have the report for the Henry Hub. I think 10:30 Eastern. Okay, you'll see some big moves then, probably before the weekend starts. And if it does its big move, I would be like, I might jump into cold. That might be it. This might be the local top for natural gas. So let's say cold, around $52 right now. See if it can get a 40% move. The thing with natural gas, it moves fast. So if it decides to go through here, I don't know how much it will go down though this time around. I mean, all the bulls might get lucky though, because I'm very bullish by the spring. But for now, let's say it goes down 20. Yeah, it could, huh? Yeah, that's a potential. It goes down 20%. So let's see if cold could probably go about 30 to 40% from that move. Then yes, maybe $70 from $50 to $70. You get some quick action there. That's a potential trade right there. KOLD. Okay, so you could short natural gas for a little while, into maybe if it keeps going, then you could hold it for the whole January. Then get out and flip into February, March. Yeah, depending on how that moves. Okay. So watch that one. That'll be temporary one. And then at the meantime, same time, you can look at natural gas stocks. So KMI was mentioned in that broadcast. Very good stock. KMI, EE, EQT, ET. I think all those four. Yeah, I would watch it. They've done very well, and they've already been doing well before the elections. Okay, so that's how strong it is. Now, once Trump gets in and he starts threatening to do tariffs on the EU unless they accept more of our liquefied natural gas, because the United States only competes with one major producer of liquefied natural gas. That's Oman. Okay, the Gulf states, led by Oman. That's it. That's the only competitor right now because they can't buy it from Russia no more. So those are only the two. And then when China raises the prices on coal, if the coal demand goes up, then natural gas will rise with it. So the global natural gas prices will go up. And then our natural gas prices in the US with the Henry Hub will go up. So you need these structural patterns. So not only the weather will come back and be beneficial, then you have all structural patterns where the whole world needs to reconfigure and purchase more US natural gas. That will add to it too. And China's stimulus. So all these things working together will push natural gas next summer into very high levels. Hopefully, that'll be the next big push, okay, to be bullish on natural gas. But for now, for the seasonal situation, because we're in the winter already, there's not going to be any new demand for natural gas. They already have the natural gas they're going to use. They already stored it. So right now it'd just be, we've reached our local peak and we're going to go down. But you never know. Maybe it'll go sideways, but that's very rare. Most of the times with commodities, they like natural gas, when they hit a peak, they just drop. So that'll be a good trade. Okay, so watch for that. All right, let's do geopolitics. One more video until we get to the big video with Palantir, where CEO Alex Karp talks about his new book. I think you guys will find it interesting. I haven't watched it yet, but it sounds interesting. So let's see what we get. Okay. Blah, blah, blah. Let's see. Okay, geopolitics. Is that the one? Geopolitics. All right. Yes, this is the one.
Competition already impacting chips right now, and that's expected to continue into 2025. But the bigger risk could be geopolitical in nature, with Taiwan as the major headwind in 2025. Our Seema Modi has been here and reporting on what to expect for today's Tech Check. Seema.
Well, Dom, NVIDIA's competitive landscape, you could say, is certainly evolving real time. Broadcom aggressively working to sign up new Silicon Valley tech giants as customers like OpenAI and Apple are looking to develop their own customized chips. However, when it pertains to AMD, which has sort of been seen as the main competitor to NVIDIA, Morgan Stanley analysts are sitting out on this one. They're not a believer. And it coincides with new research out today from industry heavyweight semi-analysis that looks at how AMD software compares to NVIDIA. And they found that NVIDIA scored well above AMD. Some of the wild cards Bank of America is watching into 2025, sentiment around AI, China's recovery, and the prospect of tariffs. Now, President-elect Trump has already threatened to put tariffs on Taiwan Semiconductor, the main manufacturer of cutting-edge chips. And experts say Taiwan could potentially be a blip in U.S.-China trade negotiations.
I think we will see President Trump take a hard line on China, but on Taiwan and other issues of China's concern, we will see a less hard line from Trump than we saw during the Biden administration. Biden stated unequivocally on 4 occasions, if China attacks Taiwan, the United States will defend it. President Trump has already walked back that statement.
Christopher adds that if President-elect Trump makes a deal with Russia and allows part of Ukraine to be annexed, that could embolden China to make a move on Taiwan. So that's why the sector is so vulnerable to foreign policy.
How likely would it be for anything like that to happen in the first year of a Trump administration, when you could argue that any political entity in the world will be trying to feel out what exactly a Trump administration 2.0 is going to look like?
Yeah, at this point, as we had that conversation with Atlantic Council's fellow Mark Christopher, very low risk of any type of invasion into Taiwan. It's still a potential risk that was nearly not on the table for the last 4 years. Now something that they'll be watching very closely as we see these discussions continue between the United States and China, and how Taiwan could factor into those discussions.
All right, Seema Modi with the latest on the chip industry. Thank you very much for that.
All right. Okay. Now that's a good segue, because we're going to see what Alex Karp is going to say, the CEO of Palantir, and his new book. He has a new book out. I'm very curious to see what this book is about.
I'm going to jump up here to make this introduction because it's so important to me before Stan and Alex come up here. So for those of you who don't know Alex Karp and missed the 344% rise in his stock this year to date, it's worth paying attention to this guy and all that he is doing in the defense and intelligence communities. And I think this is probably, even if you're not a stock owner, one of the most important conversations, hopefully, to have all of us listen to. And long before the stock went up 344% year to date, Stan Druckenmiller was his original investor. And we couldn't be more pleased that Stan also took the call to say, could you please
conversation. Super interesting between the two of you, and I don't know which one should interview which, but hopefully it will be an unfettered and open conversation that goes wherever it goes.
Tropes. I think you gotta deal with what you gotta do. This is the volume that's given to me.
Stan, as all of you know, was one of the most successful investors actually of our time. 30% compounded returns at Soros, and just a legend beyond legends. And so we're so lucky to have him. But before they come up, I was able to secure 150 copies of Alex's book that doesn't come out until February. So we have bootleg copies. And it's about the technological republic, hard power, soft belief, and the future of the West. And he's going to go a little bit into this. But Mr. Isaacson said that it is one of the most important reads that we will have. And so I think it's important that we get an inside look. And some of your fellow Palantirians are here, Alex. I didn't know the word Palantirian until I discovered that they are both existing employees as well as former employees. And it is a cult. That is what this is all about. And it's a very important cult that is changing the shape of the world and controlling much of how the world order is going to happen. And so with that, I really, really appreciate both Stan and Alex joining us today. Welcome.
Sometimes it's better to be lucky than smart. In 1976, my boss and mentor in Pittsburgh told me there was a man coming in the next day and that no one had ever heard of him, but this man was going to be a force and I should stay close to him the rest of my career. That was 48 years ago, and the next day I met Ken Langone. And for the first 15 years, it was kind of my little secret. Not many people knew Ken Langone. And then he became, I think,
what it meant to make a strong argument and the suppositions that went into a strong argument and the level of rigor you needed to be plausibly even wrong. And we would battle over political. He was then more kind of, as now, more on the right. I was at the time a classic progressive. I still am, unfortunately. That part of America has been turned over to a pagan religion that is not intellectual and not liberal. And I think culturally, I was very honored when you asked me to speak, but I did say, just if you're asking me to speak, if you asked me to speak, then you asked me to speak. So you just have to. But I'm not saying anything I don't say in public. So I do think, my father's side of my family is Germanic Jewish, and Peter is German Huguenot. You're Germanic. There was a cultural affinity. That's definitely true. And there are some very Germanic aspects of Palantir I could go into. But at the end of the day, I think all greatness is artistic. I think Peter is an artist in picking talent. I think if you asked him, he would give you an answer, but the real answer is he recognizes an artist when he sees an artist. And we've worked very effectively together. And by the way, it wasn't just no one else would have picked me to run anything. But I think there's picking and promoting and giving, operational authority to, all of which Peter has done. Very, very unusual. I would say our dialogue, one of the things that has made us, or how many people follow our company, maybe you should have followed us closer. But hopefully you didn't short us. I wish you a merry holiday, even if you did. It won't be that merry, but I would say the rigor of our dialogues, where you can have, I'm not really trying to impose my opinion on him, and even though when we started the company there was a massive stature difference, it really was about having a very rigorous opinion that you could defend. And inside Palantir, there's lots of things about us, but I think the thing that's most special about us is the platform that changed the course of arc of history on terrorism was built by us. The platform that changed the arc of history on the battlefield, the first actual use of AI on the battlefield, the first actual and most impactful use of AI is not large language models, was built by us, Project Maven. The way in which software is managed on-prem will be managed by us. The most useful, most impactful by any standard in U.S. commercial platform in the world, Foundry, was built by us. The platform that ended up being the only thing on the market useful for managing large language models is built by us. The view that large language models would be the management of the resource as opposed to the resource itself was heretical. Now everybody in the Valley wants to copy it. The way we organize almost every defense tech startup is an ex-Palantirian. I don't think you can even get investment in enterprise software at this point of any kind without an ex-Palantirian or trying to copy what we're doing. And the idea to organize, do a DPO and engage non-professional investors in essentially an army was, I'm proud of, organized by us and me. The death and pain that is brought to our enemies we're 20 years in, and if you ask any venture person, people who, whatever, some of them have liked me, don't like now, actually, I'm pretty popular, but, and more aligned, actually, with the venture community because it's newly pro-American. And actually, I would say stood up when Israel was under massive assault and it was popular to, especially in Europe where I spent half my life, blame all problems on the Jews. Our integration doesn't work. Our software industry doesn't work. Our tech industry doesn't work. But we can go to the International Criminal Court and pretend human rights abuses are happening where they're not. And complete, utter, intellectual, cringe level BS. Or, universities dedicate themselves to being anti-prejudice, except for when it comes to on and on and on. I'm very proud of these things. We're very, very aligned with Western values. Even saying Western values are superior and obvious. I think it's just an obvious fact. But certainly it's an obvious fact if you're a religious, racial minority or you're non-male. That was somehow controversial. I think still is. I don't know why. Always been kind of, we're very pro-meritocracy. No one in Palantir cares where you went to school, who your parents is, what your background is. It's ex-Palantirians here. They will attest to, we've been saying the same thing for 20 years. Right? And Eric Poirier is here. He's like, man, you're saying it. I was like, one of the weird things about Palantir is I am saying the same thing for the last 10, 20 years. But in any case, it's fresh and new now. Yeah, I don't know. That's a long-winded answer, not answer to your question.
You answered it.
So.
Mary talked about Palantirians, a term I've heard for many years, being a cult. And the talent that you as someone who's come out of there is astounding. What was your
a cult where I get no sexual benefits, by the way, just to be clear. It's a rare cult with no sex and very little drugs, and we're not poisoning anyone, but yeah.
What was your, when I originally invested in Palantir, what I heard was some of the best talent, the engineers coming out of these schools when they go to Palantir, that's always a good sign. What was your pitch? How did you get the kids? And then in the period where there was maybe a lull in perception about your company, when you weren't public,
when everybody was like, this is a bad death cult. Stealing my money, turning it into carpalives on a commune. Yeah.
During that period, was it harder to acquire talent? And now with the resurgence and your rock star status, has it become much easier to acquire talent? Has always been about the same. And what is the culture of a Palantirian, if you had to describe it?
Well, first of all, the talent. I think it is an indisputable fact we were the best in our talent acquisition. In fact, that was the only thing that anyone ever believed we were outliers at. Well, if you start with the founding team, it was Peter, me, Joe, Stefan, Nathan, and all of us called our smartest friends and said, we're going to change the world. We were maybe looked like hyperbolic. We were basically saying we're going to be the Palantir of today. In fact, we would send out these offer letters with, you could pick high cash or high equity. And high equity was we'd get to $20 million. People would get so angry, how are you never going to be $20 million? This is a total ripoff. And we called it, I would say. And then I would say Joe, who's I think pretty famous now, Bob McGrew, who went on to be one of the founding fathers of large language models, and I were very, very focused on hiring. It was like it compounded quickly because if you're being Bob McGrew is one of the more talented people on the planet, and anyone who comes into his presence second that, and then we went from one person to another. There's so many funny stories. But Bob McGrew came to me one day. He's like, "Hey, Alex, I'm interviewing this guy, Ryan. Ryan is the smartest, maybe the smartest human being I've ever met. And he's like, "Hey, Alex, what's it like to manage someone smarter than you?" So that was the Palantir culture. I was like, honestly, was not insulted by that. And then it was like very high mission, very high rigor, very low pay, very high equity. We lived together. It just was a really cool vibe, and there was nothing like it. It was like, and people who came into contact with it knew it. Now the outside venture world hated us, but on the inside, it also reminded me a lot. Like my parents were like this very unusual couple, and on the inside things were very happy, and on the outside everyone thought we were freaks, and that kind of made us even happier on the inside. Palantirians are truth-seeking, justice-seeking, fairness fanatics that are snobby, justifiably about their intellect, but not based on where you went to school or there's who push responsibility into their area of expertise and take over, and are addicted to that culture. The negative side of ex-Palantirians is they often don't want to work for anyone who didn't go to Palantir. That's a problem. Although they should just stay. And at the margin are unusual and difficult. And they're not convinced by orders. I mean, that's platforms I mentioned. My success has been getting Palantirians to believe that my ideas are theirs. But there is no way, no Palantirian. I give like a real order. Like AIP, which is our thing I launched, there are very few things that they will not just follow orders. Now, if you develop a record of being, if you have a track record of being right, especially where they thought they were wrong, I think in that way they would be classically good investors. The classic good investors I've dealt with are anomalously incredible investors like you. If I tell you something and I come back to you 5 years later, especially if you thought it was stupid and I was right, that's impressive. So, and that's how Palantirians are. It's like, yeah, that's really stupid. And then if you're right, then they listen to you. We really struggle to get lateral hires. We have a couple, Mike Gallagher joined, it's working out, but you have no ability to tell someone what to do at Palantir until you've proven yourself on the battlefield. And I bring people into my office and let them prove themselves, but it's very low authority, very high. I decide for myself. I would say from a kind of military perspective, people make fun. It's very hard to get these consensus things to work, but once they work, people take on responsibility. And you would not believe we're 3,600 people and the impact we have. It's only 3,600, and we're not planning to be 10,000 because organized correctly and honestly with AI leverage that we now have in our products and with AI, you can power whole industries with 100 people.
I had the privilege of reading the Technological Republic this weekend.
DOD, by the way, has made a huge mistake, and I've told them this in private 1,000 times, but they should expose aspects of private Project Maven to the U.S. population, not the parts that are obviously, because one of the big issues we have in the society is obviously a legitimation crisis. We spend all this money on things, and people perceive that none of it works. So, but at the time, it was viewed as insane and stupid to support the U.S. government or say anything pro-U.S. I do think it's changed quite a bit. I think it's changed for good reasons that you've elucidated. I support that, but also, quite frankly, because the Valley has realized you just cannot placate the anti-intellectual left. They'll destroy your business. And then I think that view was accelerated. By the way, I don't mean the progressive, like I view myself, and I think some people in the room probably where you believe in fairness, meritocracy, inputs be even across society. You accept that the outputs will not be evenly distributed. The basic things that I think most sane people believe. But so I think that got exacerbated, quite frankly, after October 7th. I think Silicon Valley has been the most rational in response to the heinous terror attacks, and where almost everyone in the Valley, even if they don't speak publicly, was very much on the side of defending the West as defined, the way I would define it. And I think that there's also the negative. We just can't partner with these people. They will destroy everything they touch, and there's no rational conversation. But then on the positive side, I think a couple of things have happened. Like one, whatever venture community, bless their souls, it's a financial community, and Palantir's valuation does change things. It's like people are like, wow, I can make a lot of money at that, and it is much harder than it looks. But it is getting easier every day because of reforms and because of the level of talent that is coming in to fix our government. I'm very supportive of this. I am much more optimistic than most people that there will be at least some modicum of change. It is true in D.C. there's kind of a view that it won't make a difference. I think people, just as a construct, we were managing software and software systems 10 years ago where the incremental lift was just nothing. But it is now so big that you just have to get pockets where you succeed, and it almost metastasize. And I do think Elon and others will succeed at that. And then I think our society is just crying for things that work. People are really disgusted with my version of it. The instruments of measurement have been corroded everywhere. It's like pick your favorite instrument of measurement. It's been corroded and politicized, and then does not work. And Western societies are tired of this, and everyone is pretty much across our whole society is just sick of. But wait a minute, my school isn't a school, my border isn't a border, my United Nations is not the United Nations, my government is doing X, Y, and Z, but it's all inflows, there's no outflow. And then the other side is worn out. Like the side, I've been a classic kind of progressive. I probably have to be an independent now, but it's like the alternative is what? Like things that obviously don't work. Like no one believes they're ever going to work. And many people have been too scared to say, hey, but that doesn't work. But eventually, I think there's just a tiredness with this. So and then we have really ruthless, cunning, long-term thinking adversaries. So it's not like you get a chance to rest. These things will be pen tested. And you see, so and then there's labs. Like you see, everyone in military tech saw what happened in Ukraine and worked. Everyone saw what happened and worked in Israel. And then there's U.S. commercial, which is the most dynamic, interesting. Things are just blossoming.
So, Alex, there's an editorial in the Wall Street Journal this morning lamenting the fact that an extra, I can't remember, 35 or 40 billion has been taken out of the defense budget that would have been put in.
what's happening in Israel, Ukraine, or in general, ask the simple business question, where do I have an advantage where adversaries are bad? Like we're the world's best at software and the world's best at AI, and we're fighting with hardware, which of course there's some amount of hardware we need. But then if you look at the battlefield in Ukraine, like, you know, with jamming devices that are now everywhere on the battlefield, a lot of that hardware is hard to deploy, so you have to deploy basically software-controlled mini hardware devices with payloads, and that's all software plus large language models plus smart people plus drones. Now, that doesn't mean the totality of our budget has to go there tomorrow, but it does mean that that's where, and also then you get to the ethical dimension. When you're putting someone on a human being or thousands of human beings on a hardware device, you're presupposing that they may die. Well, what if you know they're going to die? How do you deploy it? It's like, so a lot of this stuff also, you could even forget the finance, just look at it. Our ability to scare our enemy is obviously less if we're hampered by our own morality, which is like, of course, Americans are not going to allow 10,000 people to die on the battlefield as easily as our adversaries. What if it's not 10,000 adversaries? What if it's 10,000 drones powered by Palantir? So it's, and that's something we happen to be the best at. So there's the moral side of it, which is we do not, you know, we're at parity technologically, but we're not at parity morally because Russia, Iran, China do not think about human life the way we do. And then you get to the cost and the legitimacy of it, which is, you know, but I'll give you a different, slightly more philosophical riff. I would encourage everyone to think about a trend, which I'm bad at articulating, which is, in general, technology in pre-kind of software as an enterprise where you're supplying parasitic technologies to enterprises that pay you because they have to and they don't like you. And consumer internet, which is a similar form of parasitic, you are the host and you get slower and dumber, but the person running it gets richer and smarter. That we're in a different phase now where institutions are essentially becoming essentialist, which means they're actually going back to what is the institution. I think one of the reasons why Trump has been so successful is it's on the back of a philosophical movement, which is that the industry actually has to go back to, I build tractors. What is the cost of the tractor? You're not in the industry of building tractors to hire a software company that has a higher multiple. You've got to make your tractor company or your drone company or your military. The purpose of a military is to scare the adversary and make your troops safer. But then you have this massive institution, and it's like, well, is the purpose of the military to do that, or is it to create revenue for every state? Is the purpose of the military to build technologies of the past that have, and then you have this huge problem that is very hard to solve, especially for Western Europe, which is the primary purpose of many Western European defense budgets is to provide their citizens with income. But that's not the purpose of a military. But that is the purpose functionally of many of their military purchases. So we're regressing, or in my view, going forward to every single institution is going to have to say, this is my purpose, this is what we spend, this is the output, and the output has to be greater than the input. And that sounds simple, but it's very hard to do at scale. And it was not possible to do at scale, but it is now. And because it's possible, people are yearning for it. And where you see people do this, I mean, look at Israel's success on the battlefield. That's part of the reason. It's like, because they're not conflicted. It's like our job is to win on the battlefield while maintaining our own ethical standards. Look at the impact.
So it sounds like Ukraine was an aha moment of something you had figured out 10 or 15 years ago for the U.S. government. Has that accelerated your business? Like, have we crossed that Rubicon where the legacy?
I mean, figuring out what the rate of acceleration is I'll leave to greater minds. But I think the interesting thing about it is, to your point, 10 years ago, these were like, get me out of the office kind of discussions. And like, I would meet people quite literally in like the sub-basement, double-level basement of the wrong building because you weren't allowed to be seen with us. Literally.
Offices weren't that bad.
Well, yeah, so it's now moved to, we know this is true, or accepted in, say, Germany. I obviously have a high opinion of Western Europe and Germany particularly. But my interactions with people in Germany, especially people who are older and in the countryside who are very, very skeptical, was much more like, all this stuff seems crazy, we didn't believe it, but it did lead to a higher standard of living, and therefore we adopted it. As opposed to, we adopted it because it's obviously morally right. And I think those people have had deep insight into how the human mind works, and so you have to deliver benefits, and you can look at the wonders of our Constitution as obviously correct, and I kind of see it that way. But I think from the outside perspective, it's much more like a backdrop protection against a regression into non-working things. The positive thing was not the American spirit or Constitution to them, but it was our standard of living was better, our quality of living was better, we didn't have wars, people were happier and wealthier. And then I tend to think a lot of these things come down to, if you want to make people believe in whatever you want to say, like constitutional order, that constitutional order had better deliver value. And I would say, I'll get to the AI thing, that one of my biggest criticisms of the elite educational institutions I went to is, it at best is a dogma, but if you're not delivering a country that's safe, where there's a future that could be better than the past, that can even define itself as a country, where basic things like being legal or illegal are viewed as taboo subjects, don't be surprised when people get off the ship and say, I'm not into this. And that will happen here, it will happen everywhere. And then the AI version of it, I would say, is, first of all, on the military side, we have no choice. We cannot slow down. Our adversaries are not going to slow down, and we have an advantage. And they'll laugh all the way to dominance. And the dominance that they'll impose, we will not like. It's because, we got people to adopt the American way, broadly speaking, because we were exporting well-being and we had the bomb. And so AI will allow us to raise the GDP of America dramatically and help our allies do it while essentially creating the functional equivalent of the nuclear bomb before our adversaries. And then you do have an issue of how to regulate it, and that's a very complicated issue. My version of it, it should be thresholded with teeth that kick in, depending at the level of the closer you get to AGI. And honestly, I don't think China, Russia, or anyone want complete AGI. And then you have the issue, of course, of who's running these companies, and do you trust them? Because a lot of these technologies are quite dangerous, even what we're doing. And if the person has a history of being completely untrustworthy, maybe that's a problem. Or not aligned with America. And those are very hard questions. I don't have an answer for it, because none of us want government intervention, partly because we haven't seen a record of those people being competent enough on technical decisions. And because of rampant politicization of every issue, but there's still going to be very big issues.
I realize you're a technologist, but given the seat you're in, I can't help but ask, just looking around the world at the hotspots, do you see potential for upside in the Middle East? We've all been looking at the downside there for the last 30 or 40 years and terrified of it. I think we can all still see it's a hotbed, and we can see things that go wrong. Is there some glimmer of hope in what I've been seeing the last year that things could actually go right there?
Well, for people who don't know, viewed as ridiculously pro-Israel, and I'm proud of that.
I think everyone knows that by now.
But I do think the fact it's been a long time since a Western government won a war dramatically, and we need to take heed of well, how did they win? Why did they win? And what does it mean? And it's really funny because I spent a lot of my life. We have very large clients in the Arab-speaking world, and I built that business. And a lot of could see it very diminished. Iran, I mean, they're already very diminished. And like you basically have the impression there that every smart person is working for Israel. It's a good thing. They're smart. So, and then, you know, the thing we've got to get past, you know, when we get, whether it's the Bush version of they're going to be Wilsonian Democrats or the Obama version that, you know, the Persian mullahs love us, we just have to move past this stuff. The Middle East, people in the Middle East understand and manage that region a lot better than we do. And I can see if we're willing to, I'm super, we have to focus on our own morality at home, but it's barely working here. I don't think we should be exporting all of our standards, and they really have an idea. So if we can get past that stuff, and we might see a lot of goodness. I'm very long the U.S., and I can see that region doing much better than people expect. And certainly, I think they're hopeful.
It's funny, when I was over there, I got the feeling that every Gulf state was rooting for Israel, with the possible exception of Qatar. I guess as they're falling in the line now that they see who's winning.
I mean, if you, one of the coolest things about my business is I deal with important and unimportant people, or the unimportant people being very important for what they're doing. But, you know, I've spent a lot of time in the Arab Middle East, and like, obviously they're, you know, varying of opinions, but like, they very much were rooting for Israel to win. And, you know, but I think it's important also for just the West in general. And if you look at, you know, Hugh is like, spends every waking moment trying to explain to the world why they're bad. They're largely, as a proxy indicator, I don't mean one-to-one, people doing that are mostly running failed institutions in failed countries. And the Arab Middle East is not interested in that kind of failure. They're run by competent people that want success for their country. They're not interested in being told they're morally superior from the Berkeley or Yale faculty while running an institution that barely works, that's subsidized by still doesn't work, despite the fact that it's tax exempt and subsidized by the U.S. government. And so it's like they're just not interested in that. And by the way, they think people who talk like that are dumb, which is like which is why we have a successful business there. The product plus, you know, they're not interested in being. They're very smart people.
Well, I know it's one of the monsters of human history just got defeated. Talk about Mr. Assad. I think we all know the reason.
But there's the Middle East version, and then it is very important that people who are smart and have integrity and are willing to fight win. And, you know, it's like, and as a parting note, it's super important to stand up. You know, it starts with footsie, you know, pagan religion, protesting in front of everything, where people are just trying to go to school or protesting against Israel or not having an interest in defending the U.S. And it ends with people justifying murdering CEOs. They're completely linked. And that's why you just have to stand up and fight this stuff. And at every turn, when people are asking you to give money, it's like they're playing footsie with our destruction. And there is no alternative to America in the world. It's like it is the only thing that works at this scale. It's the only place where people actually are meritocratic and fair. It's the only place where they don't steal your capital after you make it in general. It's the only place, if you want to take classic progressive lines, where we integrate people from all backgrounds and do it gleefully. There's only one place like this, and the people who they begin with one issue and then metastasizes to. I mean, if you look at people on TV, whatever you think about our healthcare system, you have people on TV joyously pardoning the guy who was assassinated on these streets. And these people aren't screwing around, and we shouldn't either.
How are we doing on time, Mary?
I think we're out of time. some of it depends on what level of threat there is. But
how do all the joint forces do that without the technology community side by side with them, unless they're recruiting all the technologists to quickly enter?
Well, there's going to be some of that. But I mean, the short answer is yes, they're going to have to do that. But then productized things have to be productized. So if a piece of software is productized, the final mile does not have to be done by somebody who's hugely technical. It can be done by, I mean, like our product is used by people who are smart with high school degrees, people who went to MIT. It really comes down to how good is the product before it's installed. And you can productize a lot of things that in the past were required technical talent, meaning you could sell it to 100 people. A lot of the things they need exist in the commercial community or already exist on the battlefield. Quite frankly, a big issue for the U.S. military and other militaries is just buying the stuff they know that works instead of the stuff that they know doesn't work. So a lot of it's just contractual. They're very basic things that would transform America. Like there's something called a commercial preference, meaning I mean it's obvious to any commercial entity. I offer you a cup, and this is sold at Walmart for $1. He offers you a cup, and it's sold. It's hand built here, and it's built for $1,000. Well, but without a commercial preference, you might be buying this in the U.S. government. And so a lot of it comes down to, and I'm running around Congress all the time saying, move the budget to, now I say more, but at the beginning I was like, we need 1%, 0.2% of the U.S. budget goes to AI, defense budget, 0.2%. And if you said 1% goes to products that are software that have been used on the battlefield effectively, i.e. third-party validation and or have been sold commercially, it's probably in the 2% range. And so that has to change to like 20%. And these things will, they're going to change. Like the weird thing that's happening now is when you talk to senators, congressmen, generals, everyone is saying the same thing. And then to your point, you do have an influx of people that want to help the U.S. government who are very technical. But it's a combination of pressure from the top internally, pressure from our adversaries, budgetary pressure, and productization. And there is a huge difference now, again, with these, I'm not trying here to sell my product, but what would have taken us, we had this deployment with a very large retail company, and we did the same thing 2 years ago. It took us 6 months. Now, and that would just, there was a lot of lift for the customer, but not enough to really force the CEO to engage. Now it took 6 days. These things are like, it's like you can take large language models. So large language models, as you may have noticed, are a science experiment for you that you're paying for because if you have a board, they've told you it's important. But you can actually manage them so that they're lethal in targeting. Like, where does the drone go? How does the drone get there? Who does the drone kill? Like, for example, if you're Ukrainian, you want to kill the smart, unpopular general, not the idiot popular general. Right? So there's a lot of thought goes into taking people out. Do you kill the person near a hospital? Do you kill them near a school? Is someone in the car? Especially U.S. targeting, there's a lot of ethics embedded into how this happens. And that's complicated technically because, say, you guys are a car and you are the terrorists we're going after, but actually your phone is compromised, and because of your phone, we know everything is happening. But that can't go into the overt targeting package because most people in the room don't know your phone is compromised. It's a very complex technical thing, but you can do the lower end version, which is what the Ukrainians did, they set this up within weeks. And that stuff, then it actually, the other thing the Ukrainians have done, which is not sensitive, but there's something in software called branching, which means you can do things in different parts of the software without sharing them. So let's say you think of an investment idea, Stan's managing 5 people. One of them is really the best at making a lot of money, but also the best at losing it. So how do you control where they experiment, how much they invest, what rights they have to invest, what rights they have to not invest, what is the asset class they can invest in, what asset class can they not invest in? Does it have to get authorization from Stan? This is exactly what happens on the battlefield. But if you have branching technology like that, you can also inverse it. So let's just say you think your general's an idiot and you actually know what's going on and you're technical and they're not. You can often get battle plans to work that fighting an additional U.S. government and companies because you have U.S. has a transient workforce, unlike, say, Germany and Japan. So managing a transient workforce is difficult where you have technical specializations.
Alex, thanks for helping the good guys win. Hope you make a lot more good guys win in the future.
Thanks for helping me.
Appreciate it.
All right, folks. I think that was very enlightening. I think you should replay that, listen to certain sections. This is where the future is headed. We're going into a new age, I think, with how we interact with software, with AI, with the internet. This is going to change a lot of things. New paradigms are being built. Yeah, if you look at Ukraine, Israel, all these things that's been happening so far recently, it's more than just drones. It really is information war, and they're using AI to do that. And that's why you see a lot of these assassinations and things that happen where they're not big battles, right? You're not going to have a big battle anymore. That's not going to happen. The enemy is now very sly. It's like cloak and dagger, very more like Tinker Tailor Soldier Spy type of shit, where we're going to the next level with technology to do that. So this is what it is. This is where the money is going to be made. So a lot of these military industrial complex type things, yeah, you look at bombs and things and airplanes, think it's going to be like guns. No. It really is about the cyber war. So yeah, maybe one of these days I'll read some parts of, I'll have to look through it, the thesis about Bitcoin and soft power and how Bitcoin can be used in the next generation of warfare. So that could be something interesting to talk about as well at some point. Okay, guys, this is the end of this stream. I don't know if I'll see you tomorrow or I'll have to wait till the New Year's if anything really changes. But yeah, watch Bitcoin. See how that goes into max pay and see if it gets closest to 85,000 or not. And then from there, we can make another trade. And on New Year's, look at the stocks that I've mentioned on this stream. See how they work into January. We'll see how it goes. Everything is always a wait and see. Make it trade. You see support, you see resistance. We'll go from there. That's all it is. All right. See ya.
Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should. Feel like I should go.